All right, I think we have a quorum, so we can officially start. Thank you everyone for joining today. Thank you everyone for joining this webinar. This is Transforming Financial Operations with Faster Payments. I'm really excited today to talk to you all about faster payments and of course to moderate this panel. My name's Sam Aarons. I'm the co-founder and CTO of Modern Treasury. I lead our engineering teams and our compliance teams, and I'm also our resident payments nerd. So I love talking about payments. This is a topic very near and dear to my heart, but I want my other panelists to introduce themselves. So Aaron, I'll throw it over to you first.
Thanks. My name is Aaron Sharff. I'm a senior product manager at Check, which is an embedded payroll platform.
Thank you, Aaron. And Katie, over to you.
Yep. Hi, I'm Katie Castro. I am a director of payment operations here at Side. We are a real estate brokerage firm operating throughout the United States.
Thank you. And last but not least, Ani.
Hey everyone, Ani Narayan. I lead our payments products efforts here at Modern Treasury. Spent a lot of time thinking about the world of instant payments and helping our customers adopt it.
Thank you all for joining me today. For the audience, I just want to give a quick overview of faster payments in the United States in general, and just give a quick reminder for those of you who might be new to instant payments as a whole. So for those of you unaware, we actually have two instant real-time systems in the United States. We have RTP, which stands for real-time payments, and we have the new up-and-coming system, FedNow, which launched a year ago. And both of these systems are very similar in function. They are 24/7, 365 payment systems where payments complete end-to-end instantly. What does instant mean? Well, that usually means within 10 to 15 seconds. So it's a real change over our existing rails of ACH and wire. And this isn't unique. A lot of other countries around the globe have instant payment systems, and in many cases have had instant payments for over a decade. And so I usually like to tell people at Modern Treasury that the United States is really catching up with instant payments. We're really kind of getting to parity with what the rest of the world has. And we have this great new system in RTP and FedNow. And we're especially interested in instant payments at Modern Treasury because we think that instant payments will bring about a sea change in the industry. Real-time payments means real-time reconciliation, means real-time systems. And it also means a lot of re-architecting of existing systems. Previous systems that were batch-based or maybe were built on this implicit idea of a business day, those are no longer relevant today. And so we're going to talk a little bit about that. We're going to dive into a little bit of those topics. And we're also going to talk a little bit specifically about FedNow. FedNow is a system that released 1 year ago. It's gotten over 900 banks to join the FedNow system in over a year, which is very impressive. And Modern Treasury itself, we've moved over $1 billion a year in instant payments between FedNow and RTP. So this is a topic that is very, very close to us. We're very excited to talk about instant payments. But for the moment, I sort of want to get out of talking just about Modern Treasury's excitement, and I want to talk about the excitement at large in the industry. So I want to discuss with our panelists the larger opportunities that faster payments can unlock, specifically for advantages in their specific industries. And Katie, we're going to start with you, I think. Can you talk a little bit more about Side's use of instant payments and how it's come down to kind of improving Side's reputation in the marketplace?
Yeah, absolutely. There are many different real estate brokerages that agents can go to. They're going to select who they go to based on how satisfied they are with their services and how much they trust them. Real estates get paid typically when a home closes, when a contract is finalized. They don't get paid every 2 weeks like a lot of other industries. So because of this, it's very important that they get paid in a timely manner. There's currently a misconception from real estate agents that if they physically are holding a check in hand, that they got paid. The reality is not true, right? That check could get lost. That check could somehow bounce, or they could go to deposit it, but it's going to take several days before it could clear. So that means those funds are not yet available. With Side, we go ahead and use the different real-time payment options because we want to make sure we pay them out in a timely manner. And honestly, it's a benefit to us. It's a more cost-effective than a wire or even placing a check or placing a stop payment against the check.
Great. And Aaron, over to you to talk about payroll. Katie talked a little bit about real estate, which I think is a very fascinating use case of instant payments, but I would love to hear your take, Aaron, on the payroll industry and how Check specifically uses instant payments today.
Yeah, absolutely. So Check is an embedded payroll platform, which means we basically offer developer tools to embed payroll features into your app. So think of us as Stripe, but for payroll, basically. And in the payroll industry, our job is essentially to move money from employers to employees. And I think that our experience is going to be analogous to anyone who's moving money from one party to the other. You want to move those funds on a good funds model, right? You want to pull funds in, you want to secure those, know that you own the funds before you push funds out. What we've seen in the payroll industry is that there is a high amount of consumer demand for moving money quickly. And the example I always give is Venmo. Venmo is an example of consumers demanding an instant payment experience. But Venmo doesn't actually move money instantly, right? If I send you $100 by Venmo, I haven't actually moved any money. I owe Venmo $100, Venmo owes you $100. The money is going to catch up, and it's going to catch up via ACH. So we've experienced the exact same thing in payroll, where the consumer demand is for an employer to be able to initiate payment processing on a Thursday night and have employees paid out the next day. And as we know, ACH doesn't work that fast. And for clarity, for anyone who's not familiar, even though there is same-day ACH settles on the same day, but ACH settlement is a soft settlement. Because ACH can return, ACH behaves a lot like credit card payments. Banks sit in the middle and they arbitrate these returns. And so even though you think very similar to what Katie was saying about holding the check in hand, just because you have ACH funds settled in your bank account doesn't actually mean that you can trust that those funds are going to be there. So what happens in the payroll industry, and this is not just true for us, this is true for everyone, for Paychex, for Gusto, for ADP, we end up having to push out funds before we've secured the funds that are coming in. And again, that's because of consumer demand. And so we see RTP and FedNow as being a realization of that consumer demand, where we can actually start to move money that quickly. The reason it's going to have a really big impact on our industry is that all of us are essentially simulating faster money movement in the same way that Venmo does. We are allowing employers to approve payrolls on Thursday. We're initiating processing. We're pushing money out. And then in many cases where that employer fails to fund that payroll, we are taking losses. And so that's priced into the entire payroll industry, all of these credit losses, because we can't move money on a good funds model. So we are extra excited about moving over to FedNow and RTP because it means that we can now actually satisfy the consumer demand without paying the high price and without having to pass that high price on to users of those losses that occur.
It's funny that you mentioned Venmo, Aaron, because I think it's one of those things where, I'm talking about instant payments here as this new thing that's coming to the US, but Venmo has been around for, the better part of a decade. And it's really, I think, like you mentioned, a simulation of instant money movements. It's a closed loop. It's all happening within the Venmo system. The banks aren't participating. It's still settling over ACH. So really, I think consumers are trained on that Venmo experience, but now we're getting it bank to bank. And that's really where you unlock quite a bit of efficiency. So I think Venmo is a really, really apt comparison. Thank you for bringing that up.
Yeah.
Ani, over to you. So we had Katie talk about real estate. Aaron's talked a little bit about payroll. What are you seeing, Ani, as the product lead for Modern Treasury on instant payments? What else are you seeing in the industry? Where else are people using faster payments, and where are we seeing that traction today?
Yeah, absolutely. If I were to broaden this out a little bit, what we're seeing really is that we're at the very early stages of a secular shift towards a 24/7 economy. And really, this is being driven by two things. One is, as Aaron mentioned, very high customer expectations, or as Katie mentioned, expectations to be paid out much faster, to get goods and services when they want it. And then now with the advancements of RTP and FedNow and the availability of these faster payment rails, businesses are no longer restricted by the limitations of banking hours. They can do these payments 24/7. They can do these payments over weekends and thereby offer their services whenever customers expect it. So because these two shifts are meeting, we're seeing this overall shift towards this 24/7 economy. And recently we noticed, we heard about the shift in the brokerage industry, where they moved from a T+2 settlement timeline to a T+1 settlement timeline. So 50% faster to settle up broker equities. And that really is going to be a big driver for instant payments usage, because you now need to be able to reconcile your payments that much faster, to be able to pay out your counterparties that much faster. You can no longer be beholden to those bank hours. So we think that there will be a tremendous adoption in the brokerage industry, and we're already seeing the early demand there today. But customers are also looking at this as a way to differentiate those products, right? Similar to what Aaron and Katie mentioned about their own products, we're seeing this to be true with bill pay products. We're seeing this in gig wage. We're seeing this in insurance payouts, where corporates want to be able to provide additional services to their customers and differentiate against their competitors with faster payment rails. Companies are also using this as an opportunity to drive additional revenue. They now have the ability to price these faster payouts a little bit higher. They have the ability to pay out at the very last minute and hold on to funds for a little bit longer. And sort of in a high interest rate environment like today, they have that opportunity to make additional revenue on that float. So if you're tracking the net income revenue that's coming in, the net interest income revenue that's coming in through all the public companies on their earnings report, you're seeing that it's very high. Companies like Airbnb, companies like Robinhood, and this is basically them generating revenue on that float by holding funds a little bit longer. We're seeing really interesting use cases with instant microdeposits. That's been something that our customers have truly loved, where they now have the opportunity to verify bank accounts instantly. Where traditionally they had to use ACH to drive those microdeposits, that can take 2 to 3 days to clear, but now that can happen under a minute. So that helps them provide a very seamless onboarding experience for their end users, keep them sort of within that single context window where they don't need to come back in 2 to 3 days to complete that onboarding flow, realize that value, the product value that much faster. So we're seeing tremendous demand for microdeposits there as well. And overall, throughout using instant payments, our customers are finding ways to drive efficiencies. They no longer need to live in a batch-based world or do end-of-week accounting and reporting. They now have the ability to do that in an instant way. So overall, we're seeing tremendous demand across a variety of different industries. And as you said, Sam, we've seen $1 billion of RTP and FedNow volume go through our system today, and that's ever growing. So very excited.
Yeah, very excited. I'll echo one of the things you said, Ani, for the audience, just to reiterate it, which is we do see instant payments being used a lot as a revenue driver. When I talk about payment systems, especially to new people joining Modern Treasury who aren't versed in payments, I talk to them about the various cost structures of all the different systems, and I call ACH cheap. And I don't mean in actual dollar amounts cheap, but what I mean by that is normally folks who are paying for ACH don't pay for it directly. Like we as consumers never pay for ACH directly. We don't pay an extra fee to get a direct deposit. We don't pay an extra fee to do bill pay. In many cases, ACH is the free option. And so it's cheap enough that it's absorbed into the cost of doing business. But Ani, what you mentioned, where people use RTP and FedNow and actually charge for it, not only to cover the cost of sending the instant payment, but also to make a little bit of additional revenue. I see that model quite a bit, and I think that is one of the things that gets companies excited. And not to over name drop Venmo, that's one of the first use cases we saw, that Venmo would charge consumers to receive funds out of their Venmo account instantly, mainly to cover the cost of that RTP payment, but also to make a little bit of money for Venmo itself. So definitely exciting times, and there's a lot of ways to kind of monetize that. Want to move on a little bit. So we're talking a lot about the exciting use cases, things that are possible. I want to kind of speak to the audience that's right now considering, okay, this all sounds exciting. I want to do this. I want to talk a little bit about the implementation and what it takes to actually shift and use these new payment rails, shift away from ACH, shift away from wires, and some of the considerations that went into architecting their faster payment strategy. So I'd love to talk about hurdles that people had to overcome, specifically for the people in this call. Aaron, I'll start with you. What are the hurdles or what are the considerations that you all had to think about at Check before adopting instant payments at your company?
Sure. Well, on the technical side, because we partner with Modern Treasury, it's been very straightforward. We don't have to build a direct integration with the bank. We don't really have to understand the intricacies of the system. We just talk to Modern Treasury very similarly to how we talk to Modern Treasury about ACH. So that side has been a very low lift for us. I think in terms of hurdles to really getting to the full potential, it's all about adoption. We see quite a few of our banks adopted on the receiving side, on the credit side, so we can push funds out. We have seen very, very little adoption on the RFP side. And for anyone who's not familiar, these faster rails are push only. So they don't fully simulate ACH. ACH, you can debit, you can pull, you can credit, you can push. For the new rails, the equivalent of the debit side, of the pull side, is called RFP, request for payment. And that essentially means that you can initiate a request for a specific dollar amount that the sender then reviews and approves. It's a good system to reduce chances of fraud, but also allow the party who's ultimately going to receive funds to initiate it with a very specific dollar amount. So it sounds great. It's what we're waiting for in the payroll space because we're pulling funds and pushing funds, but at least for commercial accounts, there's almost no adoption. And so that for us has been the biggest hurdle. I will say on the flip side, though, that even earlier this year, we thought that adoption was low enough that we couldn't make this move, that we would have to wait several years. And what's been exciting is that despite the fact that a minority of banks by count are adopted on these systems, a lot of major banks are adopted. And so we're seeing about 65% of our volume going out to adopted banks. And so it's exciting to be able to implement this now and also know that it's only going to get better with time as more banks adopt.
Yeah, that's something I think important to reiterate for the audience too, is that, I'm talking about 900 banks on FedNow. We're talking about, 40-ish, 45 on RTP. And while those sound like small numbers in the context of thousands of financial institutions in the United States, the majority of those, 900 or 45, they're relatively large institutions. So they cover a lot of individuals, they cover a lot of businesses. So even though the absolute number sounds small in the grand scheme of things, it's actually very impressive in terms of coverage. So it's very impressive to see those systems grow up to have that kind of coverage. But I think the more coverage is always better. And so it's exciting to hear, Aaron, that even with the coverage that they have today, that you guys are all steam ahead on it.
Absolutely.
Katie, over to you. I'd love to ask you the same question about hurdles that you had to overcome to implement it at Side.
Yep. So there was something that Aaron brought up, right? With the payroll company, you want to get the money in before you pay out. Same thing happens with real estate compensation, right? We want to get the money in before we then disperse it out. That one deposit that we get in could tie to like multiple invoices that we need to then pay out. For us, it was how are we going to reconcile those transactions? How are we going to reconcile the deposit in order to go ahead and get the payment paid out in a timely manner? And Ani, you talked about reconciliation, and we actually use Modern Treasury's reconciliation program. It allows us to quickly identify and match the transactions, so that way we could quickly go ahead and disperse out. We've been operating on with real-time payments as our default for some time now. And we have it automated so that if the participating bank does not participate in real-time payments, it will auto default to ACH. Frankly, like we see, right? You talked about wider adoption. That would be great to have a consistent outcome for all agents. We do see the difference when an agent is using a bank that does offer the real-time payments, they get it immediately. Their counterpart, their peer on the same transaction, they may take 3 days to get the money. So it's definitely had a huge impact on customer satisfaction. And real-time payments has also reduced our inbound contacts, right? It's reducing the questions of like, well, where is my money? Well, it's already in your bank account. So we definitely seen some wins with that. Wonderful.
Wonderful. Yeah, it's definitely exciting to reduce support burden through the use of instant payments. Ani, I want to ask you a little bit, given that Aaron and Katie, they're practitioners, they're involved in putting instant payments inside of their businesses. You're obviously a little bit more on the product side. I'd be curious to ask you the same question, but with an additional spin, which is, what are the hurdles that you see ahead for instant payments as a whole within the industry?
Yeah, absolutely. And actually, before I dive into that, I just wanted to spend a second on that coverage piece. I was pulling up some numbers last night on looking at the counterparty coverage for our customers on how many are eligible to receive RTP or FedNow. And it's about 70%, anywhere between 65 to 75%, which is quite large. So to the audience listening out here today, I certainly don't think coverage is a limiting agent to adopt instant payments today. I think between RTP and FedNow, if you can get to 70% of your counterparties faster in an instant way, I think that drives tremendous value. And I'm sure that 30% will catch up pretty soon. On your question, Sam, we spent a lot of time working with various players in the ecosystem to find ways to drive adoption for instant payment rails and find out those blockers. These are core providers, the banks, the networks like the Fed, TCH, other payment processors and providers, as well as corporates. And I've written this article, which we can link out to in the notes, called the 3 I's. We've basically condensed all of these learnings and these asks into a very simple framework called the 3 I's, where we talk about infrastructure, interfaces, and instructions, and all of the things that kind of lead up into those 3 different verticals on what we need to see to further drive adoption. I'll specifically focus on one each in those sections today. With infrastructure, what we're still seeing is that while the payments are instant, the reporting of the payment statuses and the transaction the account balances are not necessarily instant all the time. And the core providers to the underlying technology providers for the banks are still operating very much on a batch-based world or on a lag. So when you do send out that payment, it's important for corporates to have that immediate confirmation when that payment goes out, to have that real-time status visibility in real time to their cash balances and cash positions across all their accounts. We at Modern Treasury piece together different pieces of information that we get from the banks across their files, their APIs, their webhooks, and provide that clean interface to get to as real time as possible to provide that feedback. But I think there's a tremendous amount of work still to be done to get the underlying technology to an advanced state to be able to handle the world of instant payments. In the world of interfaces, Aaron and I spent a lot of time jamming on RFP. I could not be more excited for that particular capability. It is the #1 requested capability from our customers today. Everybody wants to be paid in faster with irrevocability 24/7 over weekends. But today, that experience is highly fragmented across all of the different bank apps. So just to walk through what an RFP experience is, you have to request a payment from your counterparty where they get that notification on their bank app, either a portal, mobile app, whatever it is, to then go complete it and push that payment out. But that notification experience is highly fragmented today. That overall mobile app experience or that dashboard experience is different bank to bank, where corporates don't have the confidence to be able to tell their customers to go use this if they don't know what that end user experience is going to be. So we work with the banks along with the networks to emphasize the need for standardization across the RFP user experience and to be able to define a unified way for that to be completed across all the banking system so that corporates can initiate those payments with confidence and know exactly what their end users are going to expect, not really have those funnel drop-offs or, when folks have notifications turned off or they don't see that notification come in, really have standardization there and drive usage for the capability. So that's really important in the world of interfaces, amongst other things. And then lastly, with instructions, we're seeing that corporates are looking for instructions on how to do instant payments in a compliant way, in a risk-free way, and all of that. But one of the things that we're also seeing is that the laws that govern payments or the usage of certain types of payments have not yet caught up to these new instant payment rails. One such law is particularly applies in the real estate space called the good funds law, which in many states today, it's driven on a state-by-state basis, but in many states, it articulates that only wire payments are good for any payments that require good funds. That law was defined in 2006 in many states. So that needs to catch up. We spent a lot of time with the Federal Reserve and TCH to bring the laws back to to 2024 to be able to leverage rails like RTP and FedNow. So generally across these three different eyes, we have a lot of different things that are desired. But nevertheless, I'm very excited about the progress that we've made so far across the industry.
Yeah, I will echo that. I hear a lot about RFP, and so a lot of people are excited about RFP. Just to dive into one thing that you said, good funds law. That's another thing I've heard. Katie, I'm sure you've heard that as well, being in the real estate space. But it sounds like good funds is one of those things that would be great if that were enshrined in law, that FedNow and RTP could be used for those, for those kinds of use cases, right?
Correct. There's some places where we have to get a certified check to show proof of good funds, which is just silly to me. It's silly.
Yeah, it sounds like we're waiting a little bit for the laws to catch up with the technology, which seems pretty normal to me in the United States, but it sounds like we'll get there. It sounds like some people are waking up to this possibility. I want to just ask you all, just because you've gone through the ringer on this, and I think we've gotten the audience sufficiently excited about instant payments, I sort of want to ask everyone here for one piece of advice that you would give to companies that are evaluating instant payments. Ani, I don't want to put you on the spot since I'm sort of throwing this on you, but what kind of advice would you give to one piece of advice that we would give to companies evaluating payments today?
Yeah, absolutely. I don't think using instant payments is an all or nothing opportunity for customers. You don't need to wait for 100% coverage to be able to leverage it. As Katie highlighted, they do leverage multiple payment rails. There is a fallback to very important traditional payment rails like ACHs or wires. So I implore different CIOs or heads of payments at various companies to think about leveraging instant payments as a key part of their arsenal, but think about using it along with other payment rails today, which means that you can get started today. There is no need for you to wait for that 100% coverage a year from now to get started. And you can put in that infrastructure in place today to be able to handle the volume that you're expecting on instant payments in the future.
Great. I like that. That's a great piece of advice. Katie, how about you? What one piece of advice you might have for folks evaluating instant payments?
Sure. So being in operations, I will tell you, challenge your operations, challenge your efficiencies, right? Like keep a pulse. What's out there? What can you add in that will make your business more scalable, more cost effective, more appealing? So continue to challenge your operational efficiencies. And like Ani said, you don't have to have an all or nothing scenario. You could use the instant payments plus the other methods.
Yeah, I like that as well. And Aaron, over to you. One piece of advice.
Yeah. I think I'll echo what Ani said, but just with a practical example, like I mentioned earlier. It was actually 3 months ago, we had a meeting where we reviewed the RTP and FedNow, and we determined that it wasn't worth moving on, and we would address it in a couple of years. And then not too long after that, we started to discover different corners of the new technology as well as ACH that work together in a way that moved us significantly forward from where we are. And so I think that waiting any longer would have been a bad move for us. I think that's probably true for a lot of people listening. This hybrid world is not as complicated as it sounds. And the new payment rails are so significantly better than just relying on ACH that it, at least for us, has been worth moving on. And I would say that really to anyone in any industry that is considering adoption.
Great. I think that's really great insight and advice for the group. I want to move on a little bit and talk about, I want to talk about Modern Treasury, obviously. I want to talk a little bit about some of the services provide. Katie, you mentioned reconciliation. Aaron, you had mentioned fallbacks. Ani, can you talk a little bit to the audience about what Modern Treasury actually does, a little bit about the role that we play in this ecosystem, and how we're helping companies actually implement faster payments on a, on a technical level.
Yeah, absolutely. The reality is that when you want to adopt faster payments, it's not as simple as just throwing yet another payment rail into the mix of your existing payments infrastructure. It actually requires teams to rethink their entire payments infrastructure end to end. And we're seeing corporates think about this as a broader opportunity for digital transformation of their payment stack. So let's just walk through that entire life cycle and talk about how that's different in the world of instant payments today. And we can talk about how Modern Treasury helps facilitate that. Let's start at the very beginning. You need the bank connectivity. Today, we announced that we're connected to 6 different banks to support instant payments across RTP and FedNow. That list is ever growing. But in a multi-bank world, for that redundancy, you want to be able to initiate RTP and FedNow payments between different banks and need a standardized interface to be able to do that. So we normalize and give you this single API to be able to initiate those payments. And those payments, it's important to realize, is that we are no longer in a batch-based world. In a world of instant payments, you need to initiate payments one-to-one. So you need to make that API call. So that shift from batch-based, a file-based world to an API is something that corporates have to reckon with. And that's where Modern Treasury can help, a single interface for all the different bank partners that you want to connect into. We've talked about the normalized API. Now, when you actually initiate the payment, as Katie and Aaron talked about with the eligibility, we provide this directory for both RTP and FedNow to run an eligibility check to see whether your counterparty is eligible to actually receive an RTP or FedNow payment with an automated fallback mechanism to any of the other payment rails. So that's important to be done as well. Now, once that payment has actually been initiated, we talked about the importance of that real-time visibility into that payment status. When do you know if that payment is actually complete for you to be able to release goods and services on your application to your customers and give them that confirmation? The real-time visibility with webhooks is really important. We spend a lot of time getting and piecing different pieces of information from the banks across their file systems, APIs, and webhooks to provide that real-time visibility into statuses and balances. Once you now have sort of sent that payment and you know that it's completed, the most important piece is to also reconcile it, as Katie mentioned. That needs to be done now on a one-to-one payment basis. It needs to be done instantly, and it needs to be done 24/7 and over weekends. So doing this over spreadsheets no longer works. Doing this in a batch-based world at the end of the day or once a week no longer works. What if your folks that are doing this manually are out of office over weekends? Are you just going to come back to a slew of unreconciled payments? So as the volume and the frequency and the throughput of these payments increase, reconciliation needs to be instant and automated, and Modern Treasury helps do that. And then, of course, in this world, we're reading a lot about the world, the fintech space today, and banks and BaaS. The importance of ledgering is paramount. To be able to ledger in a very scalable way to make sure that you have a granular, real source of truth for all of the different transactions and balances for all your counterparties in your system when you're doing payments is of utmost importance, not only for your business, but also to ensure compliance with the regulators and the banks. So our ledgering system is built to handle that kind of scale where it needs to be done with this high throughput and frequency. So we spend a lot of time on scaling that system. And then across all of this, you need to then take all of that data and put it into a data warehouse to be able to run additional analytics, create the dashboards, dig into the payments data, and we support being able to push all of that data to the warehouse. So what I've just done is walk through the entire life cycle of a payment. But what I'm trying to stress here is that each and every one of these different buckets involves modernization and transformation. And therein lies the opportunity for corporates to really rethink their existing payment systems today. And building all of this in-house is extremely difficult. As I'm sure Aaron and Katie could attest, building it, scaling it, maintaining it across all of these different individual features or products that I've talked about, across all of the different bank partners that you need to work with between RTP and FedNow is extremely difficult. That's where I spent a lot of my time focused on building products to help customers be able to do that. And that's what Modern Treasury can help with.
Wonderful. Wonderful. Yeah, there's a lot of things that Modern Treasury can do. Obviously, I'm biased in that regard, but yeah, there's a lot of different things that I think the audience maybe wouldn't think about when it comes to like, oh, I'll just send a FedNow payment, I'll send an RTP payment. But you're right, Ani, there's so many little systems that have to work together in tandem and in real time that you start to kind of, look under the floorboards of your existing system and see, oh, I actually need to replace this wholesale. So yeah, that's definitely something that resonates. Shifting the conversation a little bit, we've talked, all four of us, we've talked about the hurdles we've overcome in the past to get RTP and FedNow payments out the door. We've talked about the advice we'd give to companies. We talk about what we do today. I want to shift a little bit more towards the future and what we want to see in the future. What do we want to see from faster payments? What do we expect? How do we expect the landscape to change? Katie, I'll maybe start this question off with you. What do you want to see out of instant payments in the future? What does the future hold for instant payments at Side?
I laugh. I'm like, can we just talk about what Ani just said? Because it kind of just encapsulates it all. Right? It's the end to end. It's the not just the real-time payments, it's getting that data, getting it into a consumable way, having the reports accurate. Our accounting team will not have to wait, to pull reports at specific times, because if they could pull something and at that moment it reflects everything that is true, that would be amazing. So for the future, right, I think we'll see more banks adopting this. We'll see more RFP cases, and I imagine the reporting will be a lot more robust.
Yeah, those are all great things to want and to look out for in the future. And I think we will see a lot of advances in all of those fronts. Aaron, same question to you. What do you want to see out of instant payments in the future?
Yeah. So we've touched on RFP a lot. That is, I think, the biggest blocker for us. I think it's worth thinking of these new payment systems as being ultimately a replacement for ACH. So we need them to do everything that ACH can do. And so the biggest weakness is on that debit side. Until we have a good debit alternative, we're going to have to keep using ACH. I know I'm sort of speaking negatively of ACH. ACH has done its job. It's been a good system. It's 50 years old, 52 years old, I think. And so much of it is outdated. It's time to move on. And so ultimately, we want to move to a world where we're not relying on ACH anymore. And so really the big three blockers there are bank adoption, RFP adoption specifically, and then also cost. It's worth noting that currently RTP and FedNow are more expensive than ACH. At volume, they're still significantly more expensive. There are benefits that really make that worthwhile. And obviously there's opportunities, as we've mentioned, to pass that cost on. But to get to a true replacement for ACH, all three of those things have to happen.
Yeah, that makes sense. And even if we have all three of those things, I think it's also worth noting that potentially ACH sticks with us. I think that's one of the interesting quirks of the US is that payment systems don't really go away. They don't really die. We all still know what to do with a paper check. I think all four of us know exactly what to do if we're given a paper check. And that's something that in other countries that you can't say the same thing. And so I think, even if we have all of those things, ACH will probably still find some potential use case where potentially the cost is much more paramount to every other aspect. And maybe it'll maintain that lower end of the market. But I think what we see is that payment systems morph and change, but they still exist and they rarely, if ever, completely go away. But yeah, I do see shifts happening. And I think that's what you're trying to express, Aaron, is there are going to be big shifts if we can get those things under control.
Absolutely.
Ani, what do you think the future holds? I mean, you're seeing it from a product perspective. You're seeing it from a modern treasury perspective. What do you see on the horizon? What do you want to see on the horizon?
Yeah, absolutely. I think one of the big Cambrian moments for instant payment adoption is when governments use it for paying out for government services and disbursements. We're very excited about that. There's a very clear opportunity there. We saw it during the COVID days when the government needed to get money out and they couldn't get it out fast enough because of how slow the payment systems were or how slow reconciliation was, and needed to use third-party services and fintech apps to do that. But now that you have an in-house payment rail like FedNow or RTP, you have that ability to do. So I do think that governments are going to be adopting instant payment rails for the variety of different disbursements that they need to do on a day-to-day basis. I'm also equally excited about RFP. As we said, single biggest ask from our customers. I'll take that one step further, apart from sort of that standardized interface or the broader adoption of RFP across the banking system. I spent a lot of time working on advancing RFP to be able to support recurring payments. So sort of have a standing authorization, a debit mandate, as some countries call it. So where you can do one-time authorization for some amount to some counterparty and have that be debited on a recurring basis. So you don't need that end user to go in and pay every single time and push funds. Working with the Faster Payments Council, we've got a paper route that we're socializing right now. Very excited for that world. I think that unlocks a whole new vector of opportunities, even in the world of RFPs. And then general adoption across all of the different banking system, I think, will be very valuable. And then the last thing, I'll highlight is the importance of a unified identity. We don't have that in the United States today. We do have it when you see UPI or PEGs. It makes sending instant payments quite a bit easier when you can send it to an alias, a Sam at or a Katie at, as opposed to a long account and routing number. It really brings instant worlds. So far we've talked about the world of B2B and B2C type payments, but that's required to bring it to the world of consumer payments, very similarly QR codes as well. But once you have that unified identity, you have the additional value of sharing data between the different underlying payment rails into that identity. So it helps alleviate any discussions around fraud or risk. So I'm very excited for that world. I think that needs to be done. It needs to be one identity. It cannot be several identities. I think that defeats the purpose. Something standardized across the entire ecosystem will be very valuable. But overall, very excited about the progress we've made so far. Obviously, have a bunch more things that I'm looking forward to.
Yeah, that makes sense. And I just want to touch on that last part, the data piece you mentioned. That's not something we really got into during this panel, but this is something that we've talked about on other panels and other podcasts. One of the interesting things about FedNow and RTP is that they're built on this standard called ISO 20022, which is this new specification based on XML for how you interchange payment information between banks, between a company and their bank, between the banks and the Fed. And it's starting to spread. FedWire is moving to ISO 20022. CHIPS is moving to ISO 20022. FedNow and RTP started there. And one of the interesting features of this format is structured remittance information, where along with a payment, you can staple context for what this amount is. So if I'm paying, I don't know, if I'm paying $1,000 to a supplier, a widget supplier, and I'm paying them $1,000. In the payment itself, I can say, well, 500 of this is for invoice A, 250 is for invoice B, and another 250 is for invoice C. And I can basically give context to why I'm paying this widget supplier. And I can have all of that information, that rich, detailed, structured remittance information in that payment. It's not something we see a lot. I think we'll talk about that maybe closely related to RFP. It's not something we see the banks implementing quite yet, but it's one of those things on the horizon that I think is interesting to talk about. And just because we mentioned RFP so many times, I think that is one of those things that we hope to see, and that'll be really exciting when it comes, but it's just right out of reach. Wonderful. Well, I want to take a little bit of time now to answer some questions, especially while I have the panelists here. Can all answer some questions from the audience. I'm seeing a couple questions come through. First one, I'll read it out. Have you seen any RFP use cases go live? Ani, I think you might be best poised to answer this. Have you seen any RFP use cases go live in production fully?
Yes, we're seeing it currently being tested for real estate escrow settlement payments. So we're looking forward to seeing that go live pretty soon. But as I said, we need broader adoption across the banking system and a unified interface to really see further adoption. But we do have customers that are currently testing it to go live into production later this year. Today, as part of our press release and announcement, we talked about our support at a variety of different institutions for the capability. So we're looking forward to that usage coming live very soon.
Got it. And Aaron, you had mentioned RFP a little bit. Have you guys started testing that, or is that something that you start wanting to play around with soon?
Yeah, so unfortunately, we are fully blocked. And again, it's because of adoption. And I'm bringing that up over and over again because part of adoption is just getting the word out and talking to your banks and asking them about it and putting some pressure on. So just to be clear, if we had RFP on the debit side and then could push out through RTP or FedNow, that would truly transform the whole payroll industry. It would drive what are probably billions of dollars of losses to zero. We're not there yet. And so that's why we're in this hybrid world. The reason that we haven't been able to implement at all is that adoption for commercial accounts is at almost zero. So even though larger banks like JPMC have implemented some version of RFP, it's just for consumer accounts, and for us, we're pulling money from businesses, and so we are very excited. That will really be a game changer for us, but we haven't been able to use it yet.
Got it. Yeah, and that speaks a little bit to the identity piece that Ani was talking about, where, you know, what is the interface that a business looks at when they get an RFP? You know, they probably don't have the app on their phones. Are they getting an email to their business email to approve things? It's very interesting that, you know, I think a lot of the probably delay comes from the fact that we don't have those interfaces quite figured out yet. Katie, just because RFP is mentioned, I want to give the opportunity. Is Side evaluating RFP at all? Is there any, you know, real estate use cases that you see that would be exciting to you guys?
My mind's always spinning. It's not a high use case now, but I could see different areas of our business where we may want to explore this.
Got it. Yeah, it's one of those exciting things that I think you can't not think of it. So I think your mind is spinning is a good way to put it. Cool. All right, let's go on to the next question from the audience. Any lessons or innovations from UPI or PIX, and that's the systems in India and Brazil, that we will benefit from in the US with RTP and FedNow? Ani, I think you touched on this a little bit. Maybe you want to expand on that?
Yeah, I mean, certainly identity and QR codes I've talked about. The other thing is when you look at the driving force behind UPI and PIX in each of those countries, they were tied to the national identity scheme. They were tied to government services adopting those capabilities as well, those payment rails as well, which then makes it kind of the default for the rest of the economy to run on. So as I said, I'm very excited for that big Cambridge explosion to happen when the federal government or state governments and local governments adopt these payment rails for disbursements. There are other things. We have very clear guidelines for risk ownership and fraud ownership in some of those countries. We have good frameworks here today when it comes to things like wire payments, which can be used and are being used for the world of RTP and FedNow. So, those are irrevocable payments that are happening today. But very clear delineation of loss ownership will be very helpful. And I think that India does a particularly good job on this, where they define the rules and guidelines of the system, assigning risk individually to, the networks, to the banks, the payment processors, and also the end users, and inform end users about different schemes that might cause additional fraud. But at the end of the day, each layer on that ecosystem owns a percentage of the proportion of that risk. We don't have that sort of regulatory scheme in the US yet today. So I think that some of those countries have done a really good job there.
Yeah, I'm glad you brought fraud into the conversation, because I would agree with you. That's one of those things that I think UPI does well, is showing who's responsible for fraud and also having a lot of protections against it in forms of identity verification and security. I kind of want to ask Aaron and Katie here how they think about fraud, specifically when it comes to instant payments. Aaron, do you have any, you had mentioned fraud as, going down to zero if we can get RFP enabled everywhere, but I'm kind of curious for your general thoughts on fraud as it relates to instant payments.
Yeah, it's a good question. I think fraud is brought up a lot as a reason to not move to faster rails, as a concern, either from developers or as a resistance to adoption from banks. I kind of see this as a bit of a false flag. A lot of the fraud that we see is taking advantage of the slowness of the ACH network and also the very, very long return windows that exist for fraud. So like Katie brought up in the beginning, the very fact that ACH and checks make you think that you have the money, but you don't, that is what fraudsters take advantage of. So yes, obviously fraud will evolve. Fraud is always going to evolve and take advantage of other weaknesses in the new system. But so far, at least, we haven't seen signal that indicates that we will see more fraud. If anything, we're expecting it to go down. And so I think the concern is that you have this push of money that cannot be clawed back. But again, this is because we're used to living in this credit card and ACH world where the bank sits in the middle and arbitrates. Because these new systems are push only And because whoever's developing these systems gets to control how it gets implemented, we're expecting that to not be an issue. And again, I would encourage the group who's listening to not have that be a blocker to adoption. We just don't see that is going to be true.
Yeah.
So I would say for us, right, there's no more risk than with us sending any other payment out. We have due diligence and checks that we put upstream to monitor for this, but it's no more, no less risky than any other transfer that we're doing today.
Yeah, I would agree. I mean, I think people use fraud a lot as an excuse, but versus everything we're doing in payments today, I would agree with you, Katie. I don't think it's any more risky. I just think we invoke fraud a lot, sort of as this boogeyman to be afraid of, when really it is exactly that. It's something that doesn't exist. I think we have time for one last question, and then we can wrap things up. And I want to address this question specifically. How do corporates calculate the ROI for implementation of faster payments given the current high relative costs, limited use cases, and underdeveloped features like RFP at the current time that will require future implementation costs? I think that's a great question for you, Aaron and Katie. Aaron, how did you guys calculate the ROI and still decide to go forward with it?
Yeah, there's two factors. For us, obviously, it's offsetting the risk that we take when we move funds not on a good funds model. So that makes the cost pretty obvious. Another thing I would encourage the group to take a look at is your float revenue. This is something that we haven't really talked about yet, but with ACH, the money leaves your bank account and it lives with the Fed overnight. That's one full day of interest that you don't earn. That is because the funds are being held by the Fed. With instant payments, the money, you can retain the money longer, you can wait to push the money out, you get the money in sooner. And so especially with interest rates where they are now, that is another thing. So for us, it's reduced losses, it's increased interest revenue, and that really helps to offset the cost.
Yeah, that makes a lot of sense. Katie?
Yeah, you have the hard cost, right? Like, what does it cost per transaction? But then on top of that, there is the manual labor involved, right? How many people does it take to create a check, process a check, ensure that check clears, place a stop payment if needed, how long it takes to manage it until it fully clears. So those are like the different considerations that we added into it. Things like, the technology, right? It was not a lot more effort to process RTP since we're already sending out other transfers. So it came down to some of the manual overhead.
Yeah. No,
what are the opportunity costs?
Yeah, people are expensive. And Ani, I'll give you a chance to respond as well. You've seen a lot of companies make this ROI calculation. What's the end result usually?
Yeah, I mean, it's one, making additional revenue with those opportunities with float or even charging for faster payouts. But really, it's also a consideration not just of cost, but of opportunity cost. Are you willing to have your competitors offer a faster payment method and a better service compared to what you're offering today? Are you willing to have a slower reconciliation cycle or a more a slower operations process? I think our RTP and FedNow can alleviate all those problems and create additional opportunities for corporates. So I would encourage folks not just to think about the one-to-one cost of the payment itself, but to think about the broader opportunity cost there. And as we said, RTP and FedNow payouts for those use cases, the coverage today is at 70%. So while RFP catches up, there's still a really big opportunity to even use the push side today.
Yeah, that makes sense to me. Wonderful. Well, I think that's all the time we have for today. I know there's some other questions in the chat. I don't think we'll be able to get to them today, but perhaps we can follow up individually after this. I want to thank all my panelists for joining today. I think this has been a great discussion about faster payments, something that's very near and dear to my heart, something that I think we all love talking about. So thank you to Ani, thank you to Aaron, thank you to Katie. Really glad that you could join us today. I want to thank the audience today for joining us today as well. I hope you all learned something. Hope you all got a little bit closer in your instant payments journeys. And if you have any more questions, feel free to reach out to Modern Treasury. And again, we love talking about these things. But yes, thank you to everyone for joining.
Thank you.
Thanks a lot.
Thank you.